Good morning, everybody. Welcome back to the Real Wealth Solutions podcast. I am one of your hosts, Greg Scully. Joining me, as always, we have Darren Light from, looks like the Spark Plaza in downtown
downtown Johnson City, baby.
So we'll go have a coffee maybe later. And this morning we're joined by Keke Williams. She's going to speak to us how she and her partner empower individual investors to create the financial freedom to live their dreams. Peter and Keke co-founded Global Investor Alliance to help obtain mindset strategies and tools to create recurring income from recession-resilient investments that have ultimately accelerated their own wealth building success. That's a bit of Keke's bio. Before we started recording, I said that I had trouble reading. There's nothing wrong with having difficulty reading, but I did want to demonstrate that I do have pretty good grasp. Would you mind filling out the rest of your bio, Keke, please?
Yeah, absolutely. Well, first of all, thank you, both of you for having me on. And I had a really lovely chat with your third partner, Kim, as well before doing this. So I want to say thank you for that. And I really appreciate it. Love what you guys are doing as well. So Peter Badger is my husband, partner. We started out as friends, collaborators in investing, kind of co-investing, collaborating together, and then started putting our monies in the same pot and really sort of just elevated ourselves through a whole slew of different asset classes, because we're those kind of people that are sort of, first of all, serial entrepreneurs, and second of all, learning by doing. And so we wanted to just jump in and figure out what really fit for us. And so we did that by experimenting, trial and error, through single family homes and clusters out of state, so on and so forth, building up to the two key classes that we really love, which is the U.S. multifamily and then also farmland. But farmland with a twist compared to what most people are used to. We're so U.S. centric, focused, most of us as Americans, and we invest in farmland through the Americas. We are actually looking at stuff in the US right now in the Southeast, but our primary base is in Latin America. So I'm sure that will be an interesting part of our conversation today. A lot of people have questions around that, but we're really driven by a mission to help the average sort of corporate professional, entrepreneur, small business owner who wants to stay in their lane of active income, but realizes this is the age of the entrepreneur. You are one, whether you like it or not, because there is no job security in W-2 jobs. So you need to be developing multiple streams of income. And we want to empower people with the competence and the confidence to analyze investments and leverage their accredited investor status to be able to create these multiple streams of income and really shape out the lifestyle they want to live, not just the number goal, but what is the life you're really trying to frame. So that's kind of our focus with investors, and we like to partner with operating partners. We bring the capital and the educated investors. They bring the projects. We've vetted those partners to have confidence in their ability to perform in those projects. And then we all elevate, together as investors collaborating across these fields.
So your relationship angle is twofold. Not only do you have these, and I'm going to go on what I heard in my head when Darren said, high net worth W-2 individuals who need to park some money somewhere. They can get educated through you, partner with you, and then you also have other operators, as you alluded to, refer to them as, that you are in yourself and or these other people, high net worth individuals, investing in those assets owned by those operators, or they're coming to you maybe repeatedly. You've got a relationship kind of going now. So is that? That's
exactly right. I mean, really, we kind of sit in the middle of providing the service of education so that the investor feels confident. Because, right, to put down 50, 100K in your first deal takes a bit of courage. You got to get over your fear factor, right? And education helps you get over your fear factor, right? You build your competence for how do you analyze these things. So we teach people the same sort of macro, micro analysis, the same thing we applied to do our own value add projects with just our own money behind them on a smaller, like 20 units and under scale. We apply that same process and teach that to investors so that even though they're not operating the asset, they understand what it's taking to operate the asset. They understand the, key metrics that they're shooting for. They understand kind of every part of how this is going to work. So they know what to expect along the way. This is the stuff that relieves the sort of fear of the unknown. If you've never been in, most people that we chat with that, they'll be like, oh, well, what do you guys invest in? Blah, blah, blah. And we'll tell them. And we do so through private equity syndications and so forth. And they're like, oh yeah, I had a really bad experience with that. And so that's just like, I look at that as like a door opener conversation. It's like, oh, really? Well, tell me a little bit more about that. Like, what did you do to vet the project? Well, my friend knew somebody who, was doing this thing. And so, yeah, I don't know. It just seemed good. Like, there was no process. There was no actual vetting. And so most people that we find that have dabbled a little bit in the real estate and use their accredited investor status, they kind of didn't use it responsibly for themselves, because they didn't apply what they normally would in their corporate life, sort of skill set of analysis, asking the questions, getting the understanding. And so, I feel like that's a lot of what Peter and I have done is, I was in PwC management consulting for years, and then in like sales, marketing, biz dev, in medical and medical device and med tech and that kind of whole space all across the healthcare space. And so all of these and I really started in lending. So what are you doing? Analyzing risk. It's all about analyzing risk. And so we're really taking these same things and just applied it into a program like, okay, this is what we apply. Let's teach others to do it. And we don't look at ourselves as the gurus. We're really, we're facilitating. We have a lot of, right? High net worth WT people are not, just falling off the turnip truck. They're pretty smart individuals. They're pretty savvy. They have some sense, but they might just have, a black spot in their field of knowledge, and so we're just here to help build that field of knowledge. And then the goal is for them to continue to push us by asking the next question that maybe we haven't asked. You know what I mean? So it almost becomes like an investor mastermind group. But people do come in at all levels. And this is why we offer. So we have like an online portal that educates the newbies and also those who are more savvy that kind of have some blind spots, right? And then we have coaching if people want to have that extra accountability to really, where the rubber meets the road is action. None of it changes without action. You can study your life away. You can analyze your life away. But if you don't ever take action, you won't win, right? So there's this sort of self-paced learning. There's the coaching to help move you along. And then there's also the access to the investments themselves. And we give people a real up close look at those projects. We literally go visit. We're on site following behind the due diligence of the main operating partner. So on that side, we actually, so to speak, Darren, so yes, we're serving the investors with sort of education, coaching, and finding vetted opportunities for them. And we don't present anything that we don't already put our own money behind.
Yeah, that's huge.
That's
huge
alignment. We're huge on alignment with our investors. So we pretty much always operate on the GP side, bringing a block of capital. So we have vetted our operating partners that we like, that are in metros or locations we like. And then we agree with them, okay, we'll bring you this much in capital. And then, we work with our group and bring that to the table. And our money's on the LP side. And we're also on the GP side because we are part of that GP team.
Yeah, and it sounds like just the way you're doing your business through the education, you've got people ready to deploy capital. And because you've got this other team that's basically finding the deals and you just vet those operators, it's kind of the best of both worlds. It's an awesome model. I like it.
Because honestly, like the operators, just for example, like Austin is one of the cities that we're in. Those deals are starting to be like 60, 70, $80 million deals. Those are big chunks of equity then that you're going to have to bring to close that deal down. And think about it. You guys know this, like as operators, holy smokes, there's so many moving parts. And so when you're talking about big deals with big chunks of capital like that, it is helpful for these operators to have somebody who's really a semi-investor relations arm for them, bringing educated investors that we help handhold through the process so they don't have to.
Yeah, because, it's only been about a decade or so since like the Jobs Act where, real estate kind of got democratized and
Yeah.
more available to people. Then you pile on social media and, you know, the easy button effect of the accessibility can be very attractive. And you're right. Yeah, there's a lot that goes on to this that you don't realize from generic posting of, you know, deals being under contract and
Yep.
our IRR is this sometime in the future. That hasn't happened yet. It can all seem very attractive and easy. And because, like you said, accredited investors and a lot of people in general do have some knowledge of real estate being a safe investment because it is. I mean, the facts demonstrate that, but it can also be too easy of a bridge to making an investment without properly vetting.
That's right. That's right. Because, you know, as you well know, things go wrong, right?
Oh, yeah.
And
yeah.
for us, part of the vetting process with the sponsors, the asset managers, is really, first of all, looking back and visiting and looking at the numbers of their previous projects, right? How has their performance been? And then also looking at when things didn't go according to plan, how did they communicate? Were they transparent with their investors? Did they communicate, you know, like frequently and with facts? I mean, we're dealing with adults here, right? Most people, you can quell the nerves if you're just straightforward with the facts. You know, and so that's, you know, those difficult conversations, those asset managers that are prepared to have difficult conversations and to answer questions. And because in that process, you see how well they know their execution plan, you see how they're pivoting. And I feel it's opportunities to increase your investor confidence and your return investor because of the way that you handle that adversity. And so it is one of the key elements that we look for in our sort of asset manager partners.
Yeah, that's awesome. I mean, that's like why I read 2-star reviews on Google instead of the 4 and 5 stars. I mean, hopefully most of the time people are having a good experience and those good reviews are well deserved. But
you
know, what happened when something went sideways, and sometimes they just get in a shouting match over Yelp, and sometimes they're just professional and cordial and transparent and authentic and own their mistakes. And I think that's as important as the success side of it, is what you do in adversity.
Right. Because, I mean, don't we generally learn more from our missteps than our successes?
Absolutely.
Yeah.
Did you and Peter start the company based on, hey, we have these really good, or had, whatever this, I think you no longer have a W-2. We had these W-2 jobs with high paying salaries. Let's go do this. Oh, those people we used to work with, they need somewhere to put their money. Is this how this got started, maybe?
Yeah, that is really kind of how it got started. So, yeah, I mean, we had just both, you know, nearly 22, 25 years of corporate grind. Peter had been on the tech side of Wall Street banks. So building the trading platforms, all of that for the big Wall Street banks and such. And I mean, that's a grind. And I mean, all over the world grind, like, especially like in his younger years, they just sent him anywhere and everywhere. I mean, I think he's lived on every continent but Africa, you know? And so he had that grind. And then he went through founding a tech startup and taking that to a successful exit. And I think that, like, at that point, he felt almost dead, like so depleted. That VC process is just beyond words of a grind. And just the emotional drama that you have to go through in giving up so much of what you've been grinding for 7 years to produce and all of that, you know? So I think, you know, just kind of feel like it had been successful. He was like, you know, he had his check mark, like, I've done it, but felt very depleted and was really looking for, okay, now how can I take this and leverage it into really running my own life instead of, you know, my business running me type of thing. Right. And so both found that we were kind of investigating the real estate stuff at the same time. And as we got into this and both were like, yeah, I'm out of here. Yeah, I'm out of here. We had been collaborating as friends. And then we did start to co-invest together in a couple of multifamily projects. And then as we started to tell friends and family about this, they were just like, those who listen, some just thought we were crazy. They're like, wait, why did you leave your big W-2 jobs? Like, wait, I'm so confused. I thought that was a good thing. And it's like, yeah, no, it's pretty soul sucking. And so they were kind of, many of our friends are in this same place. Now, some of them, maybe they're a biotech scientist and they love it. Great, but leverage where you are and your capability to start making your money earn more money for you so that when you are ready to check out, you have a plan, you have an off ramp, you have choices. I mean, that's what it's all about. That's what the multiple income streams are about, right? And so as we started to tell friends and family, and those who got it were like, dude, this really works. Like, okay, I'm private lending. Okay, I bought 3 family homes in Dallas being managed there, and I'm getting some cash flow. And they started to experiment. And then it was like a few of them that were really like taken off were like, you guys should definitely teach this. Like, you should definitely just start teaching people this. And so we were like, well, okay. At the time we were doing a little bit of nomading because we were letting our investments do their work and we were traveling around the globe a bit. And it was like, well, I guess we could do that like while we're traveling. And so we just started basically sharing our own experience. I mean, we're not tax accountants or attorneys. We're not financial planners, brokers, anything like that. And so, I mean, I am a real estate broker, but, not stockbrokers or any of that nature. And so it was just like, okay, well, let's just start sharing and see who's interested. And it slowly kind of started to build from there. And you know how it is when you start to craft out a program, it just sort of evolves along the way, So what started as one short little course has become 8 weeks worth of like a theme by week to try and build people, and starting not with just the asset class, starting with where are you even trying to get to? What's your goal? What is that? And oh, by the way, are you in alignment with your spouse on that? Because they might want something completely different and you haven't even talked about it. So really kind of starting people with that, with understanding the real estate strategies that are possible, and then have them really go through an exercise of we used sort of our old business and personal coaches and some of their questionnaires really as a foundation to take people through sort of a reflection exercise to figure out, where have you been in life? Because most of our folks are, there's some in their 30s, but mostly 40s and 50s, right? And they're really starting to think about this because they're starting to go, okay, I either got to really put my foot on the gas or figure something out, right? And so that's how, we just started getting people going through this in their 40s and 50s. And they were like going, oh my gosh, like, you mean I can access my retirement account? I can use that money? Like, so helping people identify what are their buckets of capital even? How do they figure out where they want to go? Really getting an assessment. Some people really track it, some don't. Where are you starting from? What is your financial baseline? And we give them tools and templates, spreadsheets, models to help go through this whole process, right? And some people, they've got their own gig. That's fine. They already have their spreadsheet. That's cool. We'll hop on a Zoom and go over it with them in a coaching session if they want to, you know what I mean? To kind of help people get unstuck. So everybody needs a little bit something different. And in that 8 weeks, people will start. The reason it's self-paced is because different people are coming in at different levels of knowledge, right? So they can plug in where it makes sense for them, and we'll put a big emphasis on the multifamily. We talk about international investing. We talk about the ag investing. And then we wrap up the weeks 7 and 8 are really focused on things like probate, asset protection, privacy, process in managing your investments. Because even as a passive investor, if you have all these tracks of passive investments going on, you have to track that. You got to manage that. You got to have some sort of bookkeeping, got to have some sort of something in place so that when it comes to, reporting out to your accountant at the end of the year, it makes sense. Now, this is especially if you're in like those little clusters of single family homes, what we started with, which we don't do anymore because we found it's really not passive.
Absolutely.
I have some notes on that. Yeah, I was just going to touch on, it sounds like at the beginning of of the course that there's a certain level of self-reflection that goes on. Either that could be mindset, and it can also just be
absolutely
an examination of what what does your balance sheet look like?
Yeah.
What are all of your available avenues for capital and possibly deploying them? Because I know for years I did W-2 work for 20 years.
Totally.
You kind of maybe have blinders on, not
That's
purposefully, right. But the impression is that you only have limited options, either through a 401k or an IRA, and maybe investing in some stocks or something in a portfolio on your phone on the side. You might not realize that things that you have on your balance sheet can be transmuted into something else.
Absolutely. I mean, we forget, I feel like sometimes, all of us that are in this real estate bubble, right? If you are an active investor, if you're like out there in it, just like with every industry, you get very tunneled into it's like the curse of knowledge. You assume everybody knows at this point that they can self-direct their retirement account. Oh no, very small percentage of people know, right? And so I find myself always having to remind myself of that actually that is not general public knowledge. And it is probably the most powerful tool that most Americans have, because we have not traditionally in the last few decades been good savers, right? And so that's where our biggest bucket of investable capital often sits. So it's really important to get people kind of tapping into that.
With starting in the single family, I grabbed some stuff off of your website. 24 rental properties in 4 states. Looked like it was going pretty good. Getting some income, $12,000 a month, and then and these are all the things that are the risk of single family. A tenant moved out, they lost income for 6 weeks. Someone stole an air conditioning unit.
Oh yeah. Had a hurricane,
had a landslide. And the point I wrote is like, multifamily isn't exempt from all of those problems either. But what advantages, given the same types of risk?
Yeah.
What are the advantages over the single family portfolio or
sure,
like what you're talking
about? Sure. Well, number one, when you have a vacancy in single family, you're 100% vacant, right? Yeah. You're vacant multifamily, you're not 100% vacant. So you still got cash flow going on, right? You have different levels of financing available to you in commercial as well. You're no longer stuck on like everything under your own name, like everything based on your income flow, that sort of thing, right? So now it's being driven by the net operating income of the asset. So that makes a big difference as well. And third, I would say the level of professionalism of the property management, because it's not just property management, it's asset management. It is running a business, executing a business plan. And, you're not just one of 400 single family home properties that this one property manager with his, semi-trained team is kind of equipped to deal with, so it really, we have found that it really enables you to be passive as an investor in the multifamily realm, where we just really, even with the property management full-time support, did not feel like there was a level of competence and professionalism that it was really, happening in a way that was allowing us to be passive.
Yeah. And I really grab onto the part about you're buying businesses. That's really what you're doing. It's a shift from buying a house for some residual rental income to we're buying a business that can be optimized because of the way commercial lending works and the way valuation is based on NOI instead of just the old residential comp. What is your neighbor's house? What did your neighbor's house sell for? Because that's what yours is going to sell for.
And that brings up a really good point. Yeah, right. That brings up a really good point. The other aspect about multifamily compared to single family homes is it's like single family homes to me is kind of like the stock market, where it's so emotionally sentiment driven because the bulk of the market are still end buyers, like retail home buyers, right? And they're buying completely based off of emotion of like, I need a home, I need the stability, I need like whatever, right? So just like the crazy sentiment in the stock market, you get quite a roller coaster ride, or you certainly can, right? Whereas the multifamily, it's more like a steady eddy. If you're investing, if you're doing your due diligence about the macro markets you're investing in, right? And being smart about the providers that are executing the plan and looking at their track record, it really is a case of following the numbers. And if your projections have been conservative, and if you have done like, you know, worst case, most likely, best case scenarios, like most of our providers do, and kind of show you, here's the range of what you as an investor can get based upon what happens. And do we cash out refi at 3 years or at 2 years or at 4 years? And here's kind of the various scenarios, you know, so it's really, you know, it really is a business plan, whereas I just don't see that in the management of single family homes. And to me, like just as a corporate business person, I take much more comfort in that level of professionalism and business plan execution.
And I think that point of view on it is recognizable by a lot of people that it sounds like are in your network when you're framing it as we're just buying businesses shaped like apartment complexes.
That's right.
That can help people get over the barrier of why real estate.
Hey, it's Greg from Real Wealth Solutions. If you'd like to know more about our passive income opportunities, jump onto realwealth.solutions and hit that schedule a call button. We're always happy to talk about our multifamily and flip projects and to answer any questions you may have. Again, that's realwealth.solutions. We look forward to hearing from you. And now, back to the podcast.
Let's talk about the agricultural side of what you do, because for some people, even just buying an apartment complex seems out of the ordinary, let alone, I'm not exactly sure what you do. So maybe you can give us the explanation of generally what, go ahead, Darren.
And how you identified that asset.
Yeah, sure.
Yeah, because now you're in another country, in an asset class that most people have no idea about. Myself included. We talked before we started recording. I'd seen it come across my desk a couple times. You know, occasionally you'll see somebody saying, "Hey, you should buy in oil rights and the shale."
Right. Yeah.
You know, it's like, it seems like one of those things. It's like almost like a shiny object syndrome type thing for me.
Totally.
And then I had mentioned, I'm like, that just seems like a total risk thing. So there's the
there's the tee up for the question.
There's the tee up. It's like, why isn't this just like crazy? So.
Yeah. Well, I will say there is a lot of curiosity and quest for knowledge building. We see that momentum on our side for sure. So to tell you how it started, as I mentioned, when we started first kind of building our education platform and just getting on a lot of Zoom calls and sharing with friends and family and kind of starting to formalize our education process, we were more focused at the time around kind of our short-term rentals, of which we had both international and home-based, you know, US-based, right, for income flow. And then we had the multifamily going on, right? And so part of our sort of international, like nomadic moving around is, first of all, Peter's British American. So we were spending some time in Europe and connecting kind of with his side of the house and that kind of thing. And so through that process, we did a lot of connecting with other kind of nomadic, working, traveling people, with other international real estate investors, and just kind of we're building our network and our knowledge. And that's how we came across the farmland. So the first farmland actually that we invested in, and again, I will emphasize, Peter and I always invest first with our own money and see how it goes before we bring anything to the table for our investors. We'd rather make mistakes with our own money. We feel a very big burden of responsibility. We know other people are adults out there and they got to make their own decisions, but we really do want to do the best we can to help people educate and vet. But so we started in Panama, actually. And we had great confidence in actually sort of like the plan of what they were doing in terms of the growing, you know, just the entire operation, how they were laying out, how other investors were mixed in. However, where we didn't vet thoroughly enough was in what would be now the obvious part, which is where you get paid, not just from the seed through harvest, but the harvest through sale. That's kind of important. And it's not like if you grow it, they will come. No. So we learned with our next, you know, set of partners as we started to get in that, okay, yeah, we need somebody who understands, just like as a builder or as an apartment investor, if you can own the acquisition piece, the funding piece, the execution piece, the rehabs, all that stuff, the property management piece, like own the whole cycle, right? So in the farming piece, what we found is a key element is to own the whole cycle from seed to sale. And so we started working with a group called Farmfolio. We also work with another group called Green Coffee Company. So we have a big green coffee that's a private equity syndication that we brought a lot of investors into alongside us. Now these all, like you said, it's like we're investing in businesses, really. This is investing in an agribusiness, right? Happens to have a real estate base to it, but it's an agribusiness. And so like the Green Coffee Company, that one, you know, raised a certain amount of money for it, got into that. They're working their plan. They have obviously, you know, options for a couple of different exits, but they expect to either go public or be acquired by a big player because they're now the largest coffee landowner in the Salgar region of Colombia, which is the famed coffee region of Colombia, right? So that's their kind of exit strategy, you know, and around about, you know, 2025 probably timing for that exit, right? So that's like a private equity syndication. And by the way, this is slow patient capital, minimal cash flow along the way as they build out their plan. Now, that's one style, right? So we also did a few of those projects with this Farmfolio partner of ours, okay? And for them, it was a variety of different projects. One was coconut farms. One was a lime pack house that we built near the port in Apartado to be able to export. One was a teak sawmill. And so we had, but all kind of in the same region, right? And so what they did is they put a lot of focus on the beginning of just getting slow patient capital to do that really early ag development work, which isn't like building a multifamily building, which might be 18 months to 2 years. No, this is like 4 years because you're planting trees of premium crops that you know you're going to fetch good money for in the market, right? And has high demand. Think avocados, Tahiti limes, coconuts, things like this, right? And it's like, okay, well, so that early work, most of the average investors are looking for more of a cash flow, like your typical single family home out-of-state investor. Oh, I just want a little cash flow every month, right? And so there were a bulk of us that we raised money for that did these early projects. And now we've been able to evolve it to a point now that those trees are 4, 5, 6 years old. They are now yielding production scale yield of fruit that can be sold, exported in the market. And so now we're able to take that early work that we did on a fundamental level and offer to investors an ability for direct ownership in farmland. No longer do they have to be part of a private equity syndication. They get direct ownership to a lot. So what we learned in our early development projects was, for example, the sweet spot is to own the pack houses. Because once we built this pack house, you are, first of all, we already built the sales, like, the brand name, the LaDonna fruit brand name that could be now leveraged to sell to the European markets, the Asian markets, the US markets, right? And so once all of that was established, it's like, okay, now that we have this pack house, you're seeing where the very best fruit is coming from. So we're able to evaluate, oh, okay, this farm, 85% of that fruit is export quality, which means it can be sold in dollars and euros And mind you, it's pesos, Colombian pesos, labor, land costs, all of that, right? So right there, you're already getting a nice spread on that in itself. And so because we're able to see where these best farms are, then we go out to the farmers and say, you know what? This is like global gap certified quality. We're super happy. We'd love to be able to sell this. And so we'd like to buy your whole farm. We buy the farms and we basically subdivide into smaller lots. Just think of like a normal developer for housing. They go buy a big plot of land, they do the entitlements, they subdivide it all, then they build the houses. Except for we already have the trees on there. And then it continues to be managed by the farm manager. So as the investor, it's completely passive for you. You put your money in. Every 6 months, you get your revenues out, and you pay your portion of the farm expenses. So like your pro rata share. Because when you think about how farming is done, maybe you have 30 hectares, and each person has 1 hectare. But you don't farm it individually 1 hectare at a time, right? Effective farming is done at scale. That's where you can have the investment of technology and irrigation infrastructure and all these things. And so that's kind of what we've got to. Our initial goal was to be able to do what we did in that first investment, but do it right. We know this is possible. We know this allows access to investment for the non-accredited investor because it's no longer a securitized investment. It's direct ownership of farmland. So that's how it works. Now, I'm sure you have tons of questions about, okay, that's like farmland that's like, thousands of miles south of us. Like, wait, what? So part of it is, again, the vetting of the teams and their projects and their performance and their relationships. So we did create like an ag risk matrix that's in part of our course, where we kind of are going through the same like sort of macroeconomic analysis. What is the jobs and the migration rate and the crime rate and the school systems, all the things you would look at for housing, right? Well, so we created like a risk matrix for agriculture where you're looking at, okay, what is the crop? What is the demand for that crop? Where else is it being grown? Where do you have maybe a niche advantage in, against the competition? How long does it take to grow them? What are the disease problems you might run into? So on and so forth, right? And so we go through this and then, okay, what is the country risk? Do they readily receive foreign direct investment? Are they happy to receive it? Do they encourage it? What is that country's relationship with the US? Is that stable? So on and so forth, because most of our investors are in the US because we're English speaking, right? But they are US, UK, England, basically the crown, as my husband says. Anybody from the sort of original British crown is usually people who are investing in our group. And Singapore, we've got some folks there as well. But that's how we go through looking at, okay, how do we de-risk this? And part of the way that we've de-risked it is those of us that were the early capital that took the 4 years waiting and hoping that the seeds were going to take and everything was going to go well and our infrastructure was, sufficient enough to support the growth and so forth. And so that in itself has also de-risked this and keeping the same farm managers in place. So I relate this to people, especially those who have been kind of familiar with the single family home investing model. I'm like, hey, it's kind of like the same thing, except for a property manager, you have a farm manager. And that farm manager has the expertise. They've been running the farms. They continue to effectively run those farms. And then, of course, we do things like before somebody buys the land, we've had a third-party company that we hire and pay to go out and do an audit. So you literally see exactly how many trees are on your lot, and how much fruit is going to, projected to come off based upon the age and stage and whatever of those trees, how much fruit is going to come off that every year, and then extrapolate out the numbers and so forth from there. So again, truly a business, because as we get more learning, we filter that right back into the model and share that back out with investors of, hey, by the way, we've gotten a better efficiency on this portion of the farm expenses. So you're going to see a little uptick in your payout because now we've instituted, just whatever, this new aspect that helps us run it better. So it's one of those things, like it's not static, that's for sure.
Yeah, no, it's not static.
So let me think. Okay, I have some questions.
I know. I got.
I'm sure.
2 hours worth of questions.
You took the risk for a plot of land, new farm, whatever you want to call it, in order for it to grow this crop 4 or 5 years to mature, to start producing fruit. Now, and you learned along the way what not to do and what to do better. Now you are pitching this to others as investors to own a portion of this. Is this how you start each one, or do you have several of those where you have done it, or is that the next step? You're going to start more that way? Is this barren land that becomes farmland? Is it farmland that's you're just offering Joe amount of money he can't pass up, and now maybe he still runs it because he has the expertise? And then as you've done this along the way, you do have some stable ones where you continue to take people as an investor. I'm trying to get my head wrapped around the timeline of where the child is in this process. A baby, a kindergartner, 6th grader, teenager.
I don't know. I guess I would say maybe like elementary school. I mean, in terms of turning the model into the direct farmland ownership that allows both non-accredited and accredited folks to invest, we have done 3 farms. 3 farms. We're on our 4th farm that way now. Our first one was coconuts, which had come from our initial private equity early stage development, because that happened to be the very first project that Farmfolio had done. And it was, you see, the team is a combination of like Canadian, American, Colombian. And so we're able to have inroads and relationships in the Latin American market that establish sort of like credibility, and we don't get gringoed and that sort of stuff, right? Because we've got that piece, but we're bringing the sort of efficiency, just the efficiency and the sort of, standards of doing business from sort of US Canadian markets and applying it, to that farmland ownership. And so this is why there's a pro-Colombia group that's a government-run group, because they're trying to grow their agriculture and their tourism. They literally come and seek us out now and say, hey, got an old family farm. Here's what's going on. Younger generation doesn't usually want to take over it. They don't want to be farmers. It's hard, and they're like going, okay, because it's a very fractured, think about public storage, right? There's like, or self-storage, there's public storage, and then there's like a bunch of fractured, small mom and pops. Well, that's kind of what the farms are like. Thus, they're highly inefficient, and they don't have the savvy to take their excellent product and get it out to the export market. But see, because Colombia in particular has really varied elevations of land and long, wet growing season. And so you're able to get crops yielding year round that like maybe Mexico and Brazil can't, for the limes, for example, because they don't have the same variation. So they can't get the consistency of product coming out. Circling.
I'm sorry.
Ahead.
I don't mean to throw your thought off. You're improving farming, improving production of farming, because they don't have the expertise. They're just mom and pop.
That's right.
Number 2, you're improving running it as a business, as we've been discussing.
Exactly.
To make it more efficient.
And so back to your original sort of question about like, is this just blank barren land we're selling to people? No, that's the whole point. Like, we get that most investors, the first thing are saying, well, how much cash flow am I going to get out of it? So they don't want to come in the period of no cash flow. They want to come in when the cash flow is starting. That's why I really relate it for people to the turnkey cash flowing real estate, which is the single family home model generally. And that's what we're doing with the farm. We do the value add work to rehab it and get it rent ready, if you will.
Yeah, it's roughly the development risk versus buying something that is stabilized and actually has tenants in it. It's a similar analogy.
Spot on.
Okay.
Yeah. Yeah.
Give me an idea of an average return.
Average return? Okay. So depending on the farm lot you're buying and the age of those trees, okay, most trees between 4 and 6 or 7 years is where they're kind of titrating up to their top yield. And then they'll continue to yield at that for like 40 years. And then they slowly start to taper off. I am like, think of it like hormones. They kind of go up, they stay steady, and then they go down. You know, it's that same kind of thing. And so in year 4, you might get 7-8% returns.
Okay.
By year 6, 7, it's a 15% steady state. And I say this in like a conservative notion. I mean, this is what we put out as projections. Do I think we're going to blow them out of the water? Yes, I do. But I would still rather, you know, under promise and over deliver until we get more data, right? And then when you get more justified data, then I think it's like sandbagging to totally under project it. You know what I mean? I think you should be honest. You should speak to the numbers.
So have you ran across, you know, like we all, I've been doing this 3 years full time. Greg, pretty much both of us 3 years full time.
Nice.
You run across people in your industry that you don't know through the same education platform that you joined however long ago. You just, like yourself, we meet, right?
Yeah.
Is there a faction of people that are making these investments as well in different companies in the same areas or different countries, and you talk shop, or is it just not that many people out there?
I mean, there's some that are doing a bit of this in the US. There are fewer that are doing it abroad, certainly fewer that are doing it well. And I think that our good fortune is the fact that the partners on the executive teams we work with are multicultural. They are Latin American and North American. And that combination, I think, just produces, you know, a better result. So I would say in terms of the international, vet very carefully. Don't leave any stone unturned, you know, and just tread carefully. And, you know, I welcome people, they can call us. We've looked at a lot of different folks that we don't feel are reputable and so on and so forth. And, you know, in private conversations, I'm happy to share what we know with folks, that kind of thing. There are a number of, you know, platforms, just like you see, like the Realty Moguls and the Crowd Street and Yield Street and all these, you know, real estate kind of fractionalized real estate ownership platforms, right? That people are able to invest online now. I feel like that's building on the agriculture side, because, you know, it creates a little liquidity for people, right, in the market. Like that's kind of, I mean, think like Robinhood for real estate investing and, you know, house both multifamily and ag, right? We do kind of see things moving towards that direction, because not everyone has like 50K to plunk down, but they want to be in real estate, right? So you see all those other platforms, and I just feel like, okay, that's been commercial real estate stuff, right? It's usually like mixed use, or it's maybe a bit of office, or it's some multifamily that you usually see. Those are the projects you usually see on those platforms. And, you know, I think that will develop for the farmland side as well, because there's, you know, there's 3 or 4 companies, I'd say, in the US at varying degrees of evolving their own models, doing it slightly differently. But do I think, I mean, we don't really collaborate with the American ones. We're always at the big shows, because really what it is it's about sort of the fruit shows. There's a big, what is it called? Fruit Logistica that happens in Berlin in February every year. So this is really where the people start to meet, because you're out there building up the pipeline for your fruit that's coming. You're trying to solidify your contracts, because, you know, we're selling through to Costco and Walmart and Trader Joe's. And I mean, those are contracts you don't get without being real buttoned up in your process of how you're getting from seed to sale, because from their standpoint, what's most important to them is consistency of supply. And so this is where we're finding angles and entrances into getting the big boys on board in the US market. And I mean, we're feeling our ramping just skyrocket right now because it's better quality and and still reasonable prices. I mean, countries like Mexico and Brazil have been sort of like raping the US on prices for certain products that they're the primary supplier of. So now it's like eyes are open and they're like, oh, okay, I got a new market I can pick from. Great.
I mean, that's all fast. The projected returns are impressive. I was waiting to hear from a risk adjusted basis.
Mm-hmm.
You know, it's got to be more than like 12%. I'll just go buy real estate. So I imagine there had to have been a fairly significant upside for. Well, I mean, you alluded to it. There is definitely additional risk, regulatory risk, governmental risk, weather risk. I mean, but it's justified based on your risk portfolio.
Yep.
On the potential returns, because and then ultimately you're selling a product at the end of this process that somebody has to agree to buy. So
that's right.
Unless you
and there's a real trick
just
to
getting
it.
out at the wholesale level, but
that's right. That's the real trick to it. Is like, you see, that whole food sales and distribution and logistics piece. I mean, just like we were saying, how we end up being helpful to the primary GEP operating partner because we're taking one of the pieces of the puzzle kind of off the table a little bit for them, because you got to find the opportunity, you got to fund it, and then you got to run it, right? And so in this too, it's like, okay, we already have the exit. We have the sale piece. We've worked out that piece of it, right? And so there's confidence in knowing that's a whole, food logistics and distribution, that's a part of the business, and once you've built that, it can then be leveraged again against all these crops, right? We can keep going back and picking premium crops advantageously where we find good land values, good crop quality, things like this. So then, right, we actually just become the scouts looking for these opportunities in those markets. Yeah.
At the risk of completely derailing this, have you looked into the cannabis space for similar reasons of there looks like there's going to be some runway here.
Oh yeah.
And it's just it's become its own little real estate niche because of all the restrictions around where and when you can do it. It took shells of industrial spaces and turned them into pretty high dollar per square foot rental places because it's about the only use it's about the only place that some of these growers can be. So I'm just curious, is that something?
Well, it's funny that
whether or not you're investing in it, just it's like, man, I don't know.
Yeah, no, I mean, I'm totally right there with you. I mean, I did spend 20 years in California before, that's where I raised my kids. And
it was already
one still there
in California.
Yeah, right. It was already a business for a long time. So we have many friends in the space. So yes, we did raise money for a company called Darkheart Nursery. And they actually, we love it because, Dan, the CEO, is like such a scientist, he's a plant nerd for sure, but he was really, really part of the early pioneering group with the medical cannabis in Oakland. And he's only grown and expanded since then, but he really plays a unique, so we did raise money. We were already invested, and then he was raising another round. And so we did raise money for him in that project as well. And they occupy a really unique niche because they're kind of like, they're the R&D lab that researches, just think about seed geeks, right? And like, all the hybrid versions and iterating on those and what's going to grow the best varietal, right? So all that sort of lab experimentation and the genetics, and they're able to like, okay, with every crop, right? Maybe you get a fungus, an aphid thing going on, or like what's happening on okay, well, you've got to try and resolve that, but not do it in a toxic way, right? It's being consumed. So just like with food, you need to be like watching what's going on there, right? And so they will do like lots of breeding work and lots of work to provide the R&D for how to combat various plant diseases and such, so that they can then help the farmers be more successful in their farming. So whether you're doing indoor grow or outdoor grow, and think of like your typical plant nursery, right? You can buy the seeds, like if you're just going to grow your garden, you go to the, Orchard Hardware or whatever, right? You can get your seeds, you can get your upstarts that are like the nice little ones that are easy to put in the ground and they're already started. So they make those and stuff like that as well, and the teens. And so we love the sort of unique niche that he's in, because I'll tell you what, I mean, we watched it go, federal in Canadian market first, right? But it's been a wild ride. If you've watched the companies that have gone public and this and that, and it's gone up and down and the steam they've lost and so forth.
Recently.
Ooh, so it's like, I know it's one of those things where you're like, well, and there's already so much, like there's so many growers, and it's kind of a low margin to be the grower. Again, like the farmer, to some extent, you have to figure out a unique niche in maybe how you bring to the market or what exactly you bring to the market. Can you value add your product in some way? You know what I mean? So it's, it is a highly, highly competitive field. It is still a little difficult to figure out. So we do have that big bet placed, but it's a little difficult to figure out. I feel like that's so unique because it's almost a biogenetic sort of thing. It's not just a grower or a company that has a bunch of dispensaries, like I don't want a bunch of retail chain dispensaries, but however, that said, I love the people that are doing like an industrial REIT, all focused on cannabis, right? So you find a lot of players out there doing that. The other place I really think to make money in cannabis, it's all like the gold rush, man. In this green rush.
Picks and shovels, my
friend. You got it. Picks and shovels.
Self-fertilizer.
Right? Yeah. So I see a lot. As a matter of fact, my nephew now works. He's a mechanical engineer and was doing all this sort of like irrigation kind of equipment stuff for, these big installations. And then he found an opportunity in the cannabis industry, the trimmers, all the stuff. Okay, because here's the thing about cannabis. It's highly, highly labor intensive, and the plants can be highly sensitive. So need more ways to automate. And here's the other thing. Not every grower is going to be able to afford to buy this big capital equipment. They can't buy like 5 trimmers and stuff like that. So what are they doing? They're renting them. And so I know companies here in Denver that are being the renters of those equipment so they can service those smaller growers. And then what do? They're also advising and consulting, providing more plant science. And, so they're really kind of providing this full suite of, consulting to the smaller growers.
That's not much different than conventional agriculture in that a lot of people don't own their own combines.
True. A lot of people don't own their own land.
Well, yeah, sure. So, I mean, it's just, I appreciate you entertaining the tangent there. Because it's,
sure.
I mean, it's new and it's a pretty young industry and there's going to be a lot of acquisitions and people going out of business as it matures and stuff. So, I think the only other thing, crypto is more volatile than the cannabis industry, but don't check your portfolio every day. Only check it on good days is my recommendation.
Right.
But I appreciate that because there's alternative investments, and real estate is one of them. Somehow it's in that bucket, but there's a whole other kinds of buckets out there where there's potential for outsized returns if it's done correctly.
Mm-hmm. And I mean, another thing to do, again, just like you were saying, a lot of these farmers don't even own their land, especially in the US, because land is so expensive, right? And so if you want to be involved in the cannabis space, again, sort of from that angle of picks and shovels, and I mean, you can, we could get together as a group and syndicate like a sale leaseback type of thing. Like maybe the grower owns their own facility now, but they could really use the ability to unlock that capital and use it to fuel their growth. And so they look for people who want to buy and do a long-term lease back to them. So that's also a great niche.
Yeah. Interesting.
Yeah. All sorts of opportunity everywhere, isn't there? It's never dull.
Yeah, the agricultural thing, that's fascinating. I'll have to think about that some more.
Yeah, well, I kind of grew up on a hobby farm, if you will. My dad was an engineer, but we had 25 acres of land and we had a lot of chores and a lot of animals. And we leased out most of our land to local farmers who actually were full-time farmers, and they had their land, but they needed more, right? And so they would lease ours as well. Now my parents have leased it off to the utilities that have solar fields up in one section. And
nice.
You know, so they were smart about it, right? You know, I mean, I kind of feel like I grew up in that, you know, land rich, cash poor, you know, just very middle class American. But we did grow like all our own food. Like I learned to be resourceful and resilient. And I had no idea what a treasure it was when I was in it. It was when I grew up and left that I realized what gold that really was, you know? So reflection, right?
Yeah, no, that's awesome.
Yeah.
I was just thinking of another tangent, but I'll reserve it for another conversation.
Another day.
Yeah, we're gonna run out of time. Well,
absolutely.
Yeah. Once you take us out, I think we're at a good spot before we open a whole nother can of worms.
Okay.
Tell us more about the. I want to get the name right. Oh, I switched the your investment alliance.
Yep.
The Global Investors Alliance.
Yeah.
And then we'll take it home.
Absolutely. Well, you can reach out to us. Easiest way to find us is Global Investor Alliance, singular, globalinvestoralliance.com. And very quickly towards the top of the page, you'll see a, book a strategy session with us. You can certainly roll through there, how it works, kind of gives you a sense of how we approach projects, how we work with people. But if you just want to get on the phone and have a chat and be like, hey, what's all this all about? And what do I really get out of this? And can you show me a little test drive of that education portal so I know what I'd be getting and whether it's really going to apply to me? Happy to do it. That's why we have it on there. So easy for people, go ahead and skim through or read a lot, depending on your learning preference. Some people prefer to have a conversation first and then dig in. Other people prefer to dig in and then have the conversation. But yeah, we open ourselves to do that. Real estate is a 7-day-a-week kind of thing, and we are real estate weirdos. So we meet people on, as Kim knows, Saturday mornings or Sundays or whatever, because we realize that, people are typically full-time working. We travel around a bit, but we just, cover the time zones and make it happen. So that is the best way to reach out to us and find out what might be appropriate for you, whether you just want some self-education, whether you want some direct coaching to help you really get traction, or whether you are like, yeah, you know what, I actually know what I'm doing, but it looks like you got good investments because you can see some of the past investments we've done on the investment page. Well, then just plug right in and call us and ask us. I mean, typically we aim to do like a deal a quarter. So we try not to mob people. We want to let people know we're here, we're available, reach out, but we're not going to hover on you. We're not helicopter moms. We're all adults here. So direct your learning, and we're more than willing to support your success,
Yeah, that's awesome. I mean, Darren and I are both products of education platforms. We firmly believe in them. So here's another option. If you're interested, we're firm believers that it is definitely can be an accelerator to going bigger, faster.
Yeah, for sure.
I don't know if there's a third one, but yeah. So
because I think even just the community and the collaboration
absolutely
helps you get over the fear of pulling the trigger the first time, right?
Yeah, I mean, Darren and I benefited tremendously from the networks that are associated with the platforms that we've been involved with. And that alone, in my opinion, can be worth the price of admission, assuming you still want to put in the work.
That's right. Because it's always still work. Even as a passive investor, you've got to be smart. You've got to get yourself educated. Like, how can you do anything right without getting educated, right?
You said the word coddle, and I can't help but I know. I'm sure you have people that join your platform, and you realize after a few sessions, calls, whatever they are, you can't pull them along if they're not going to do the work and want to be a part of it. So that's not your job. Unfortunately, some people do that.
Yeah, and they do. And we try to catch that, Darren, on the front end.
Sure.
We really do try and catch that on the front end. We don't want to push people into joining. We want them to be jumping into joining because they know it's right for them and they have at least enough confidence to start taking action. We're totally fine with the person who comes in and says, I'm a little scared to do that. You know what? Fine. Let's get educated. Let's get educated. That's why we're here, you know? But you're right. At the end of the day, the people have to be willing to do the work and at least be able to get in there and dig into those PPMs and understand what is that information being presented relative to other things. What does that mean? And, you know, is it the right investment for them? Does the timing make sense? Does the cash flow make sense? You know, because you know how all these, depending on what kind of market you're in, there's different exit plans. There's different, some have no cash and then a huge chunk. Some have a lot of cash along the way and it's all steady, you know, but people need to go through that personal assessment. And what we find is the biggest thing most people do is just start jumping in. And that's why we started our education portal with hey, let's just take a pause for a second and think big picture and make sure we're in alignment on the mindset and whatever that you can approach this stuff with success.
Right.
So,
I mean, I jumped into single family first. It sounds like you did as well. Ended up, you know, going in a different direction. But once you jump in and you commit some, then you got to unwind that thing. And you're killing, you know, there's some opportunity cost to that. You're like, oh, now I got to get out of this thing so I can redeploy it where I really want to be. So if they can figure that out sooner rather than later.
Yeah, like those 24 single family homes you mentioned at the beginning.
I mean, you know, it sounds fine.
Painful.
It looks like you made some money. But having 2020 hindsight, maybe you would have done it a little bit different. But well, all right, I'll take us out. Thank you, Keke, for joining us. Darren, I appreciate you joining us as well. If you found this episode useful and informative, we certainly appreciate you sharing it directly with someone. And again, Keke, sounds like you're doing great things with the Investment Alliance, but I particularly want to thank you for sharing the stuff on the agricultural side and the cannabis tangent. That's I think it's going to be new for many people. Certainly was for myself. So getting a little peek as to what that opportunity looks like is very helpful. So for thanks for talking about that.
Absolutely.
Darren, you got anything else?
No, the agricultural was the first, so it's prompted me to, my wheels are spinning.
I know you want to buy some cows, so.
Yeah, I'm all about some farming, bro, you know it. Okay.
Nice.
There was some light tractor shopping going on this
There was. It's not been done yet, but it's coming down the pipe.
Well, you'll be pleased to know, Darren, that I learned to drive a tractor before I learned to drive a car.
Nice. Yeah, you are.
I totally am.
That's awesome. Yeah. Okay.
Indeed.
Peter's not stupid.
No.
Yeah. I meet him too.
Exactly. Well, as a matter of fact, I'll leave you with these parting words. We have just told you we like to travel, right?
Yeah.
Needless to say, air travel's not very pleasant still at this point. So we got ourselves an RV and we are hitting the road, my friends. And I know you guys are in Tennessee.
We are,
and we're going to be rolling through. So
absolutely.
I'll be calling you.
Pigeon Forge, most popular national park in, I guess that would be the nation.
I know. Kim sparked me with the information and I was like, well, I'm going to let you know when I'm coming through.
Yeah, it's beautiful around here. I think you'll love it if you decide to come all the way across. It's very nice.
We're heading out. Literally, we are picking it up in Florida. Peter is.
Oh, okay.
And he's driving it back here. We're hooking on the car, get ourselves sort of oriented for a couple of weeks. Then we're going to head to Pennsylvania, see my parents. My dad's going to make us a stand-up desk, so we can still work and all that.
That's awesome.
Oh, nice.
And then we'll be rolling down to the Southeast. We have a little family reunion in the Outer Banks, North Carolina.
Okay.
And then we're just going to keep going because we have a lot of investor base down there around like sort of Alabama, Georgia, Florida, Carolinas. So we're going to do a little bit of a road tour on our farming stuff. So maybe we should do one in Tennessee.
Absolutely.
Gather a group of investors together, do it at a Rio. We don't really care, but people don't know about this stuff.
We host a meetup, so we can incorporate it. We know of a couple other meetups. We could combine them. We'll have a special session if we have to.
Yeah, love it.
We have some really good investor friends that organic farm for living in Texas. They sold it off chunk by chunk. They now live in Tennessee. They're friends of ours through our RIA.
Right?
We would love to have him and bring other people. I love
it.
Sure.
That would be super cool.
Look, keep us posted.
Will do.
Awesome. Yeah.
Absolutely.
Always be networking.
Always be networking. That's right.
With Real Estate 101. Always be networking. So.
Absolutely.
All right, Keke, thank you
Great
again.
fun.
Darren, we'll see you.
Thank you so much.
Yeah. Thank you guys. Have a great rest of the day.
All right.
Okay. Cheers.
Bye.